Welcome to Course Dunia.
From this accounting equation, we can able to get the knowledge about the financial status. So that means company has how much of assets, company has how much of liabilities. So the entire concept will be explained in the accounting equation. So if you want the knowledge about the accounting equation, first we need to know about the three accounts. First one will be the assets. Second one will be the liabilities. And third one will be the equity. So without these three, the company is not happen. So definitely we should have these three in the company: assets, liabilities, and equities. Assets means assets will we have the two types. One is a fixed asset, second one is a current assets. If you want to start a company, so definitely you should have the equity. Equity means nothing but the capital and also the assets. So from the capital, we need to purchase some assets to start a business, like furniture, uh, office stationery amounts, computers, laptops, everything. So if you want to start a company, you should have the capital that will becomes under equity. From the equity, we can run the business. After running the business, we'll have the assets and we'll have the liabilities. Liabilities means nothing but the amount which we need to be paid. Assets means we have the money with our hand. In the assets, we have the two types of assets. So one is the fixed assets, second one current assets. Mobile and immobile assets, we can also call it as. So from these three categories, like from assets, liabilities, and equities, we'll get the accounting equation. Accounting equation is like assets is equal to liabilities plus equities. So the capital and the liabilities, what we need to be paid, it will become the formula of the accounting equation. Assets is equal to liabilities plus equity. So we have the definition for accounting equation, like the accounting equation is a fundamental concept in accounting that represents the relationship between a company's assets, liabilities, and equities. So definitely, like assets, liabilities, and equity, everything will have the relationship. So with equity only, we can able to purchase the assets. With the equity, we can able to pay the amount like it. It is a simple and foundational principle that underpins the entire double entry accounting system. So later on, we'll explain about the entry system. From these accounting equations, we will have some other equity formats also. Likewise, assets minus liabilities is equal to equity. Assets minus equity is equal to liabilities. Liabilities plus equity is equal to assets. We can rearrange or we can reformat the principle in these three formats. Next one, types of account. How many types of accounts are presented in accounts? So we have the 5 types of accounts, namely like asset accounts, liabilities account, equity accounts, income revenue accounts, and expenses accounts. So these are the 5 types of accounts, and we are going to be learn each and every account. What is the account type and everything? Asset accounts. Asset accounts means nothing but the company owns or the company have the control over the asset. That is called as the asset accounting. The definition: these accounts represents items of value that the company owns or controls. So that means the company directly will purchase or otherwise they have the control over the assets. Assets can be further divided into current assets, that means short-term assets, and non-current assets, long-term assets. First one, cash. So cash is a current asset. Why means it's a exchange values. So today we have the 500 rupees note with hand, but after 1 hour we don't have the 500 rupees. We'll have the change like 100 rupees, 50 rupees, 10 rupees like this. It's a like a short term though. Immediately we can able to exchange the value. Second one, accounts receivable. So whatever the amount we need to be received, that means from the data only, because we are selling the product on the credit basis. The amount has to be receivable, right? It is an asset to us. That is the accounts receivable. Third one, inventory. Inventory means the stock at godown. And next one, prepaid expenses. Prepaid expenses will also comes under expenses. Property, plant, and equipments. These are also will comes under the assets. And this property, plants, and equipments will becomes as long-term assets. So because if you purchase right away, it will be with our hands on a long term. And finally, investments like mutual funds, shares, bonds. This all will comes under the investment component. Next one, liability accounts. Liability means the amount which we need to be paid. If you check from the company side, it is called as a debt. The definition, the accounts represents the company's obligations or debts to external parties, like assets, liabilities, can be categorized into current and non-current liabilities. So like how you have been separated the assets, likewise we can also separate the liabilities like short-term liabilities and long-term liabilities. Short-term liabilities means the amount which we need to pay to the creditor, that is the accounts payable, that will be comes under the short-term liability. And the long terms, like if you are taking a loans from the banks, it will be a long term likewise. First one will be the accounts payable. Accounts payable, the amount which we need to pay to the creditors. Next, short-term loans, long-term loans, and accrued liabilities, bills, bonds payable. Next one, equity accounts. So before only I've been explained about the equity. Equity account means nothing but related to the capital. So here also, after deducting the liabilities from assets, so that means assets and liabilities. After deducting the liabilities from the assets, whatever the amount is there, it will be related to the equity, whether it is like increasing or decreasing. Like means if you have the assets, the equity value will be increased. If you have the liabilities, if you have the minus value, will have the lesser amount like this. The definition is the same, like equity accounts represents the owner's interest in the company. So because the owners is going to invest the capital, this account shows the residual value after deducting liabilities from assets. Likewise, I mentioned equity accounts are typically associated with the owner's capital, retained earnings, and other equity related transactions like common stock, retained earnings, and additional paid up in capitals, dividends. Comes under the equity accounts. Next one, revenue account, which can be also called as income account. That means where we are generating the income. So we can generate the incomes like sales or service. Likewise, we can generate the income. Let's go to the definition. Revenue accounts track the income generated by the company from its primary operations. They are temporary accounts that capture the company's sales, fees, and other forms of income. Like we have the list of revenues, like how we can generate the revenue. First one will be the like sales revenue. Next, service revenue. And third one, interest revenue and rental income. So these four categories we can generate the income in your business. Sales. If you have the product-based company, so definitely you should have the sales and purchases will be there. And if it is a service-based company, from the service we'll get the income. If you have the deposits or if you have the any loan, if you given any loans to the other parties, you will get the interest. From that also, you can get the interest. And if you have the lands or buildings, we can get the rental income from that also. So from these four categories, we can generate the revenue to the company. Expenses account. So the expenses, what kind of expenses we are paying? So company related, manufacturing related, like what different types of expenses will be there. So based on that, we can arrange that how much we are paying and how much we are doing that. Expenses account represents the cost and expenditures incurred by the companies as part of its operation. So whenever the operations is doing, definitely we should have the expenses likewise. These are also temporary accounts and used to calculate the company net income. Likewise, like no, if you have the more sales, so definitely we should we should have the expenses to decrease the profit. Otherwise, we need to pay the taxes to the government. So that was the persons will be increase the expenditures and expenditures like wages and salaries, rent expenses, utilities expenses, and cost of goods sold, depreciation account. So these are the some kind of examples which will be comes under the expense accounts.